This is the Asia Trade. I'm Shery in Tokyo.
I'm Avril Hong in Kuala Lumpur for the Malaysia Economic Forum. Your top stories this hour. Alphabet shares swing to losses as revenue projections beat estimates while capital expenditures are set to hit a record. Qualcomm and ARM sliding after giving tepid forecasts. Asian stocks set to extend US losses as the rotation out of tech rolls on. The Nasdaq tumbling through its 100-day moving average. Also ahead, President Trump talks trade and Taiwan with China's Xi Jinping in a call ahead of a planned face-to-face meeting later this year. And we begin our coverage here at the Malaysia Economic Forum, speaking exclusively with the country's economy minister and the CEO of its biggest lender, Maybank.
Tech names again in focus in the Asian session, especially after we saw those software makers, AI-related names take a hit in the Japanese session yesterday as well. You can see Nikkei futures right now pointing to a little bit of upside of 0.4%. But all of this with caution in the Japanese market. Of course, we do have the lower house election coming up this weekend. We have already seen the Japanese yen very weak and really moving back towards that 160 level against the US dollar, not helping those uncoordinated comments coming from Japanese policymakers that really leads to skepticism about whether Japanese leaders do in fact want a stronger Japanese yen. We do have a 30-year JGB sale today as well. We have seen tepid demand already for the 10-year JGB auction earlier this week. So we'll be watching those fiscal concerns in this country as well, and perhaps more of that rotation towards cyclicals, towards banks as well, given that we had another solid set of numbers out of MUFG. The offshore yuan right now holding at 694. We have seen the first retreat this week of the onshore and offshore yuan in the Chinese markets, Avril.
Yeah, in terms of what we saw in the US overnight, it was that rotation out of the tech giants that continued. The chips were down. Momentum, they unwound and into stocks that tend to do well when these economic prospects improve. So we saw that money going to small caps, value plays. Equal weighted S&P, that rose 1.1%. And in terms of the earnings reaction after the bell, Alphabet initially, it sank about 7.5%, then it recouped. And it was interesting, we saw most of these AI infrastructure stocks rallying with Alphabet's high capex, although in terms of some of these big tech names as well that we've been watching, Qualcomm, ARM, they also missed the mark on forecasts, and you see it playing out in the market reaction. For more on those earnings and forecasts, let's go to San Francisco, and our tech executive editor, Tom Giles, joins us now. So, Tom, walk us first through Alphabet's numbers and its capex.
Sure. The big headline number, the jaw-dropping number for Alphabet is that CapEx spending number, much, much higher than anybody had predicted. And it's one of those markers, right, that signify that Google is very much committed to this AI boom, and they're having to spend lavishly in order to make it happen. Oftentimes what happens when you see another one of these providers, one of these cloud providers, issuing these really big spending plans, people start to get a little bit worried. They get worried that is there enough end user demand to justify this investment in chips and data centers and all the other things that go into the AI infrastructure? The answer for Google is, at least in part, yes. What they said is that what they reported is that revenue has exceeded analyst predictions. They are talking about this boom in demand for their search-related tools, which, as you know, if you use Google, you are increasingly using Gemini, their AI tool. What that's doing is it's getting people to use search more. It's getting them to spend more time on Google search, and it's basically helping their advertising-fueled revenue. So those are all positive signs. If you're going to spend more in infrastructure, at least give us a sign that there's user demand for the services you're investing in. And the answer for Google seems to be yes, which is why you saw the shares recover slightly. They're still a little bit down in late trading. We'll see what happens tomorrow. As you know, as we've been talking about, there's a bigger cloud hanging over the tech market right now. And will Google be affected by that?
Yeah, Tom, I mean, the AI spending narrative has been one big concern, of course, around all of these tech earnings. But another narrative that has unfolded has been the lack of these memory chips and higher prices as well. Qualcomm is seeing also the consequences of that.
Yeah, Qualcomm, their forecast was not quite as rosy as people would like to see. While the AI boom is happening, people are still using their smartphones. In fact, it's all related. We're using lots of AI services on our smartphones. But if you're Qualcomm and you do not have access, or your customers don't have access to the memory chips that they need, they're going to be making fewer smartphones. And that's what you're hearing from Qualcomm right now. Their customers who use Qualcomm chips for their smartphones, they don't have the other components that they need. If they don't have the memory, if all of the memory chip makers, right, and you've got SK Hynix, you've got Samsung right there in your backyard, if they're putting all their emphasis on HBM, that higher, more advanced memory, they're going to invest less in the other kinds of memory, like the kind that are used in smartphones. If you're making less of that, your customers are going to be starved of the chips that they need, of the memory that they need to make their smartphones. And that has a knock-on effect for Qualcomm.
Tom, what are you watching next in terms of tech catalysts and upcoming earnings?
Well, we've got Amazon coming up. We saw ARM coming out after the bell. Again, all the signs are positive. Their forecast actually exceeded the average analyst prediction. The problem is there, and it's similar to AMD. If you're not coming in way above, that just speaks to how high expectations have climbed in the market right now, how far we're getting ahead of ourselves. Against this backdrop, you have this concern about the disruption that is going to result from these AI products, like the kinds that are being produced by Anthropic. If you are really concerned about disruption, if you're really concerned about the AI impact, it's really kind of putting a sell mark across a lot of different names in technology right now.
All right, Tom Giles, our tech executive editor, thank you so much for that update on the latest tech earnings, which are really not helping market sentiment, right? Tech is continuing to fall out of favor with Wall Street. Investors now turning to value stocks. Let's bring in Bloomberg MLive strategist Brendan Fagan. Brendan, we are seeing this rotation continue, but some people are saying that this could perhaps be healthy if we're seeing more signs of broadening out.
You're definitely seeing that. In today's tape, you definitely saw value outperform. The interesting thing to say about today's trade was that you didn't see the participation from small caps, which is a little bit worrying. But it seems no matter where you look, there's sort of something for everyone, glass half full, glass half empty. If you're bearish, you kind of look at the overall market structure, obviously highlighting concentration risk. But from a technical perspective, the damage the NASDAQ 100 is doing below the 100-day, you're starting to think about those November lows in terms of a technical level as to where we could trade, which wouldn't be great. But if you're an optimist, you are looking at the broadening of participation, albeit without small caps today, like I mentioned, and the pickup in U.S. data. Looking at the U.S. Economic Surprise Index, it's showing that there's underlying momentum. So that explains why value and small caps have done well over the recent weeks, but there's plenty to ponder here in U.S. markets.
So what are we expecting in terms of the continued declines as momentum unwinds and the impact on tech stocks?
Well, at a certain point, it seems like it's become self-reinforcing. It seems like at the moment, AI is sort of eating AI in that, these software names are bringing in AI and that's going to hollow out their businesses. But at the end of the day, even Jensen Huang pushed back on it today, saying that it's ludicrous. So I think that could be sort of a turning point where you sit there and force companies and people to reassess just how much they're willing to shed risk in this environment. Is it sort of transformative, or is it something broader than that where it revolutionizes businesses? I think that's sort of the middle ground that we're in right now, and the market's figuring out where it goes from there.
Yeah, talking about the optimists and the bulls, some are calling this a good entry point because U.S. stocks are now, about 5% cheaper than in some metrics versus like 3 months ago. But when it comes to the broader earnings outlook right now, how are we doing as we head towards the Amazon results as well?
Overall, it's been solid. I think you've had bright spots here, you've had weak spots there. I go back to getting off on an iffy footing with the banks and the financials a few weeks ago. That was sort of seen as the bellwether group. laying down a marker for how the rest of the earnings season is going to go. And sort of, it's been some winners here, some losers there. And I think that's been the tale of the earnings season. Overall, it's generally pretty constructive. There's nothing too much to worry about. Looking at Google's numbers today, the massive CapEx guide is reason to be optimistic, even in a down tape. So there's plenty to go off of if you're looking to make an optimistic case about the earnings picture.
Is there still any optimism left when it comes to cryptocurrency? I mean, it's hard to keep the faith among the crypto loyals when you see them breaking through Bitcoin through these technical levels.
Yeah, I think this is the bigger problem with a tape that is sort of weeding out speculative excess, whether you want to pinpoint it on the nomination of Kevin Warsh and how that may play into a potentially smaller balance sheet and the tighter financial conditions that may come from that. That may be where people might go to cite the reason for Bitcoin being under pressure, but it's obviously a telling signal for the risk environment right now that, you know, the higher beta, frothier areas of the markets are getting crushed, whether that is crypto in Bitcoin trading down to 72,000, or it is, like we mentioned, the software names. So it's definitely cause for concern that we really haven't seen a pickup in crypto.
So does that mean that it makes sense that the pickup in the U.S. dollar as a safe haven is perhaps playing out, despite the fact, as you mentioned, a perhaps more dovish Fed could be in place?
I think the pickup in the dollar really goes back to what I said about U.S. data. U.S. data has picked up of late. ISM manufacturing this week has been strong. Services followed that. So there's this broadening picture of U.S. strength. Obviously goes back to the Fed statement removing concerns about the labor market. So you have that, and I think the overarching theme here is that the appointment of Kevin Warsh, while we don't know necessarily who we're getting, whether it's the old Kevin Warsh or a more moderate Kevin Warsh that we've seen in months past, it's this removal of tail risks and this dollar risk premium that was sort of embedded in the price, and that's coming out, offering the dollar some footing.
Brendan, we're going to leave it there for today, but thank you for running us through all these nuances on the market. Bloomberg MLive strategist Brendan Fagan for us. Now, in terms of geopolitics, we're also tracking some of these developments. The president of the U.S. saying he's had a long, thorough, and excellent phone call with China's Xi Jinping discussing trade, geopolitical flashpoints, including Taiwan. Let's bring in our China correspondent, Mimin Lo, in Hong Kong. So, Mimin, how did both sides portray that phone call?
Yeah, there is a slight difference in their tones. If you look at President Trump's Truth Social post, it seems very exuberant. He said that everything is, quote, all very positive. He said that the relationship with China and his personal relationship with President Xi are both very, very good. But the Chinese readout is a little bit more serious in tone, and it talked about how China always aligns its words with actions, and that is perhaps a signal that they want the U.S. to do the same. President Trump outlined a list of issues that he spoke with President Xi on, including geopolitical issues like Ukraine, Iran, Taiwan, also trade issues, talking about China's commitment to buy about 20 million tons of soybeans this season and 25 million tons next season. He also talked about oil and gas purchases from China as well. But the Chinese readout didn't talk about the list of issues that both presidents spoke about, except for Taiwan. It explicitly stated that Taiwan is the single most important issue in U.S.-China relations and warned the U.S. that it needs to act prudently when it comes to any arms sales with Taiwan, and that China will never allow Taiwan to be separated from it. So it's interesting in terms of the focus of the agenda here from the Chinese readout. But overall, the tone seems to be positive, and it seems to be laying the groundwork for that summit that will take place in Beijing in April. According to President Trump, he reiterated that he is going to travel to Beijing and that he's very much looking forward to it, even though the Chinese readout didn't mention that.
President Xi Jinping also, though, speaking with President Putin just hours before that call with President Trump. How did that conversation go?
Yeah, it's interesting because this call, it was a virtual meeting, a video call that lasted 1.5 hours. And it's interesting because if you look at People's Daily, which is the Communist Party mouthpiece, you would notice that the coverage of the Xi and Putin call took up a lot more space than the coverage of the Xi-Trump call, which tells you that the relationship with Putin is still very important to China. And according to TASS, the Russian state media, both sides talked about everything from Iran to Venezuela to Cuba. China talked about the need to jointly stabilize this geopolitical environment, and it seems like both sides still presenting this united front that China will continue opening up its economy and present development opportunities to Russia. But I think it's interesting because the timing of this call is coming at a critical juncture. Number one, it's coming as President Trump and the U.S. is hosting dozens of officials from allied countries from Europe and Africa to talk about boosting collaboration in critical minerals to counter China. And number two, it is coming when the U.S. is weighing an attack on Iran and has threatened tariffs on countries that trade with Iran, and China is a major trading partner. So both Russia and China have this common goal to stabilize Iran in the Middle East. They see Iran as that important linchpin, and so no wonder China and Russia continue to remain very close, as we can see from that phone call.
Bloomberg's China correspondent Mei Min Lo there. And coming up on the Asia trade, our exclusive conversations with the Malaysian economy minister and Maybank CEO. Plus, UBS Wealth Management explains where they're seeing investing opportunities in Asia. Much more ahead. This is Bloomberg. We're seeing a little bit of downside on oil prices early in the Asian session after we saw a jump in the New York session. We've been dealing with conflicting reports on the status of the nuclear talks between the U.S. and Iran. There are still questions whether Washington will proceed with military strikes. Of course, we're watching whether those could actually disrupt shipping lanes. Iran's oil production, roughly 3.3 billion barrels per day, could be under threat. President Trump telling Tom Yamas of NBC News that Iran's leader should be very worried. This coming as U.S. military forces amass in the region, with diplomatic talks between Washington and Tehran set for later this week.
I would say he should be very worried, yeah, he should be. As you know, they're negotiating with us.
I know they are, but the protesters have said, you know, where are the Americans? You promised them we would have their back. Do we still have their back?
Well, we've had their back, and look, that country's a mess right now because of us. We went in, we wiped out their nuclear.
So that's the question. If we wipe them out,
we have peace in the Middle East.
Yeah.
If I didn't take out their nuclear, think of it. If we didn't take out that nuclear, we wouldn't have peace in the Middle East because the Arab countries could have never done that. They were very, very afraid of Iran. They're not afraid of Iran anymore.
Let's bring in Bloomberg Digital Politics editor Romy Varghese. Romy, so where are we in these talks between Iran and the U.S.?
So far, our sources have confirmed that as of now, the U.S. is meeting Iran in Oman on Friday. Of course, even the talks about the talks are running into disagreement. Iran wants these talks to be just about its nuclear program. They want these talks to be limited. But we have the Secretary of State for the United States, Marco Rubio, saying, well, you know, for these talks to be meaningful, we need to talk about other things like the ballistic missile program, Iran's sponsorship of militant groups in the area, and its brutal crackdown on its own people. So, you know, this doesn't exactly bode well for the talks that we are having disagreements about the parameters of the talks right now.
Not to mention, Romy, how Iran has previously resisted these talks with the U.S. So you do wonder, even if they do engage, how durable all this is going to be. Talk to us about what has changed.
Well, yes, I mean, we saw talks between Iran and Washington collapse last year after Israel launched airstrikes against Iran. But, you know, Iran is in a very particular moment now. I mean, we've seen hundreds of thousands of protesters. I mean, we've seen thousands killed, but our analysts are saying this is the biggest moment for Iran since 1979. We could be, on the cusp of significant change here. So yes, the regime is in a pretty vulnerable state right now. And of course, we've had Trump, threatening airstrikes on Iran. So, and we've, seen action in the Middle East. So, Iran is in a pretty tough position right now, and it's compared to where it was last year. It is definitely more receptive to these talks. Whether these talks accomplish anything, we will have to see.
Romy, thank you. Bloomberg Digital Politics editor Romy Varghese with the latest there. We have more ahead on the Asia trade. This is Bloomberg. Here are some top global headlines we're following. The U.S. president says he would not have nominated Kevin Warsh to lead the U.S. Federal Reserve if Warsh had expressed a desire to raise interest rates. Trump told NBC News that Warsh wants to lower borrowing costs regardless of his own view. The comments could come up during Warsh's confirmation process, where the Fed's independence is likely to be a central topic.
Let's get to the Fed. Is there any doubt in your mind that interest rates are going to be lowered?
Not much.
Why? How can you say that?
I just think they're going to be lowered. I mean, they should.
Is your new Fed pick on board with that?
We're way high. Okay, we're way high in interest. We have now, with me and with all the money, I've always been good at money. And with all the money coming into our country, we're a rich country again. We have debt, but we also have growth. And the growth will soon make the debt look very small.
President Trump also told NBC he's learned that a softer touch may be needed in the federal immigration crackdown in Minneapolis. He says he's ordered the Department of Homeland Security to immediately pull about 700 agents from the city. About 2,000 will remain, which is far above normal levels. Tensions have been high since ICE agents shot and killed 2 U.S. citizens. The Trump administration has hosted a major summit on critical minerals, bringing together 55 countries to cut reliance on China and secure stable supplies. Vice President J.D. Vance called for predictable investment conditions and a coordinated agreement on price floors. The topic has been discussed among industry players as a way to protect non-Chinese companies from China.
Yeah, President Trump also announcing a $12 billion deal to create a strategic critical minerals and rare earths reserve. So we'll be watching some of those miners in the Australian session. But take a look at how precious metals are trading right now. We're seeing a little bit of a rebound for gold and silver prices, but only after gold dipped below that $5,000 level. There's a lack of fresh catalysts in this space. We saw, of course, the historic plunge late last week, and gold volatility is still at the highest level since the 2008 financial crisis, silver volatility perhaps since the 1980s as well. Still, the likes of UBS Wealth thinking that gold remains an attractive asset and a strong hedge, and expects it to reach 6,200 for the first 3 quarters of the year. And coming up, our exclusive conversation with the CEO of Australia's largest pension fund, AustralianSuper. This is Bloomberg. Take a look at how Australian assets are trading early in the Asia session. The Aussie dollar has been pretty flat, but this after reaching, of course, 3-year highs on those tightening expectations from the RBA, and after the RBA already moved this week. And you can see the ASX 100 under a little bit of pressure, 0.2% in the last trading session. But this, as we're seeing a little bit of a rebound on some of those precious metals, so we'll be watching those miners in focus as we get Australia underway. And also Australia's largest pension fund, now AustralianSuper, hunting private equity deals in Asia to grow its portfolio. Speaking exclusively to Bloomberg, Chief Executive Paul Schroder also discussing their tech allocation amid a sell-off in the sector.
Exposed to tech, and we're invested heavily there. Of course, it's going to be a really important part of the future, but nobody quite knows what its form's going to be. I like to remind people that railways started in 1825 and the iPhone arrived in 2007, and ChatGPT went to the public in November 2022. So we're still early days, just starting to mature. We're seeing a bit of extra capex at the moment. We're watching valuations. We're thinking about future earnings. But, you know, is AI the big story? Of course. Is it going to be disruptive to software? Almost certainly. Is it going to be disruptive in other ways? Of course. But nobody quite knows just how.
Yeah, so how do you separate these AI-driven gains from the real thing or just hype? Do you have any concerns that when you look at this AI trade, does any of it look like a bubble, like shades of the dot-com bubble?
Oh, well, I think the fundamental thing to know about AustralianSuper is that we're an active investor. And, you know, the world is swimming in passive cash and passive capital. And our people spend a great deal of time looking for value and where we're going to generate free cash flow in the future. So, you know, we're not just following the index here. We're very thoroughly, carefully thinking about who are the likely winners, who are the likely ones to create long-term value, but most importantly, who's got the capex right, who's going to have the earnings right, and who's going to have a sustainable business model in the future in the context of a globally diversified portfolio. And of course, that's so important to investors and to the members of the fund, that they've got exposure in various markets, various sectors, and across all asset classes.
Okay, so in terms of being active and globally diversified, are you redeploying money to Asia from the US or elsewhere?
We're very strong on the US. You know, it's been the source of the greatest earnings and wealth over the years. I'll just give you one example. If you had $100 and you invested in European markets in 1920, it's worth $19,200 today. If you had the same $100 and invested in the US markets in 1920, it's worth $104,600 today, 5 times. So so many of the great companies are in the US. So much of the deep earnings is in the US. So we're strong in the US, but we're coming from behind. About 35% of the portfolio is exposed to the US. So we're strong in the US, we're investing in the US, we've got a great office there in New York to help us invest well for members. But it's also true that we are diversifying and thinking about Asia, especially through the PE lens, because Asia is going to represent 42% of GDP in not too long.
Now, you did mention PE there. That is attracting some significant interest at the moment. Can you tell us a little bit more about your strategy for private equity investing?
Private equity represents to us, obviously, the greatest opportunity for reward, but also risk. And it's also an expensive way to invest. So we're thinking very deeply about PE. Our global head of PE is based in New York. Our future is one of more PE, probably about 4% of the portfolio is PE at the moment. We'll probably get to 10. The fund's going to triple over that time, so you can see the size of the exposure growing. And where we are at the moment is just at the beginning of a plan to expand our PE exposures in Asia and across Asia, and as I say, across various countries. So PE is going to be very important to us. It's a very important part of building AustralianSuper members' retirement balances. I imagine we could double our exposure in a fund that's tripling. It's a co-underwrite, co-invest, deep partners, high-quality GP strategy that we're implementing, and it's one that we're now thinking about expanding into Asia.
So if you're going to expand this into Asia, which particular markets would you be looking at? And how do you navigate around some of the transparency risks when it comes to private markets?
It's very important that we do this prudently and thoughtfully. We've had some really good experience. We've got an office in Beijing, which helps us a great deal. We've had some really great experience in India. We're energised about where Japan is at the moment and the opportunities that exist there. So I don't want to foreshadow exactly what we'll be doing and where, but I think it's more likely that those opportunities will exist in those strong, more developed nation economies where we've already got existing connections and relationships.
AustralianSuper Chief Executive Paul Schroder speaking to Bloomberg's Paul Allen. And you can explore live streaming news and interviews, as well as all Bloomberg TV shows, documentaries, reporter analysis, and more in one place. Check it out at bloomberg.com/videos. Now on to the latest from the corporate front. Bloomberg has learned that SpaceX held meetings last month with banks from outside the US as it targets a listing this year. Sources say one group was made up of European banks, while another included firms from other regions. We're told that Wall Street giants Bank of America, Goldman Sachs, JP Morgan, and Morgan Stanley are already lined up to lead the listing. Sources say Boeing is cutting about 300 supply chain jobs from its defense division, notifying affected workers this week. But we're told the company is otherwise still in hiring mode with more than 1,300 job openings. It's also looking to help affected workers find other positions in the company. Boeing's headcount at the end of last year stood at 182,000. BYD sales in Germany surged more than tenfold in January as the Chinese automaker continues to expand in Europe's biggest EV market. It sold more than 2,600 new cars there last month. That's more than twice as many as Tesla in the same period. BYD first passed its US rival in Germany and the UK last year. Now coming up, we begin our exclusive coverage from the Malaysia Economic Forum here in Kuala Lumpur, speaking with Economy Minister Akmal Nasir. That conversation is next. This is Bloomberg. The Malaysia Economic Forum begins today, and it brings together economic policymakers and business leaders to set the nation's socio-economic agenda. Joining us exclusively is Malaysian Economy Minister Akmal Nasrullah Mohammed Nasir. Minister, it's great to have you with us. So talking about the economic backdrop for Malaysia first, I mean, you saw that advanced estimates, it looks like you guys could handily beat the 2025 growth projections. Are you going to see more of the same for 2026? And might that cause an upward revision in the growth projection?
Well, thank you, Avril. I will begin by saying the economy Madani and through 13 Malaysia plan have proven to be effective for us to face through these geopolitical challenges and whatnot. So that's why when we look from the performance of 2025, it shows that we remain resilient, competitive at the global segment, but at the same time, definitely moving towards 2026, as what we mentioned in our 13 Malaysia plan, is going to be about digital economy, is going to be the focus on AI, and definitely we are looking towards all these higher value or the value creation based economy for us to maneuver all these challenges ahead.
Yeah, so with all these measures underway, that growth projection for this year, I think is 4 to 4.5%. Correct me if I'm wrong.
Yeah.
Is there any room for revising it upwards then, given how you're seeing the tailwinds evolve for the Malaysian economy?
Because, I mean, we have to look into more overall overview. Definitely in terms of domestic economy, we believe we have that strength. But at the same time, we cannot rule out these ongoing geopolitical challenges. So that's why I think it's not for me to revise easily the numbers, but definitely showing 4 to 4.5% shows how confident we are to continue to tell to the world that Malaysian economy is still open. We are actually going to be competitive, and definitely in 2026, as the Minister of Economy, I want to see we one more time to beat our own prediction on economic growth.
On those geopolitical concerns that you raised, how worried are you that chip tariffs could escalate? And is the Malaysian government ready to provide support in that event for the semiconductor industry?
Like when we first, in terms of how we continually engagement and negotiation with the US, we managed to bring down the reciprocal tariff from 25% to 19%. So in that sense, definitely it's within our interest to provide the most conducive and productive environment for our suppliers. And it also shows our certainty to continually engage with the US, China and whatnot. But definitely, when we talk about semiconductor, Malaysia is number 6 in the world. But our strength more towards the back end, about the packaging, about the testing. But that's why moving ahead, for us to remain competitive, we need to move from the back end to the front end. So that's why I think in terms of the chip design, this is what we are actually trying to uplift towards the value creation economy. Because if not, if we remain complacent with what we have today, things are getting tougher and getting more challenging. So that's why for me, it's not just to talking about what will happen in the next few months, but also moving up the value chain so that we are going to be resilient for the next 2-3 years.
On that, moving up the value chain for chips, how would you rate the progress? What more needs to be done, you think?
Well, last year we made some breakthrough, I think, in terms of the agreement with ARM Limited, for example. Definitely this year is the year of execution. For me, even we have managed to secure understanding with ARM for them to train 10,000 of our talents. It's no longer about quantity, but it's also about the quality. So in order for us to ensure the value, the way for us to move higher value chain, we have to ensure our talents will meet the requirements by the industry. And doing that definitely is a dynamic thing. You are talking about technology. The breakthrough will happen from time to time. So we need to actually on par with the progress of technology changes.
So along with all this, would you say that the government's focus in terms of the workforce preparation would be about upskilling and accelerating those initiatives?
Yeah, definitely. Because when we talk about the needs to meet the industry needs, Malaysia is known for having good talents, educated talents, but as we said about technology, things changes continuously. So that's why for the Malaysian approach, definitely in terms of the masses, we do have TVET, the technical training program, but at the same time, for the higher end or the niche segment, that's why we need to even make the breakthrough, having the talent training program direct with the industry at the world stage, at the world standards, so that Malaysia is ready to take more opportunities in terms of semiconductor and the chip design.
And that's a work in progress. I wonder if I could get your thoughts also on when it comes to these chip exports. Is it a concern that perhaps the front-loading effect that some say was helping to support these shipments, does that wane? And what extent do you think the strength of the ringgit could curtail this as well?
Definitely when ringgit gets stronger, for us it's good. It also shows confidence about our economy. But despite with the ringgit strengthen, we can see the exports last year actually went up. So definitely what we are providing is no longer about cost competitiveness, but also the values. So that's why I think Malaysia has to actually really look into how can we move up the value chain, because to remain competitive, especially in this context, is no longer about being cost effective, but how do we actually can penetrate the market and provide the niche and the values so that we will be part of the global supply chain.
Data centers, they've been booming in Malaysia, but this is also coming at a time when the power grid does look quite strained. Do you see that as a headwind?
Well, in terms of the energy, I came from Petra in my last responsibility. looking at how do we manage the utilities. Definitely, our role in terms of energy is to ensure we remain focused, committed to our trilemma about providing the affordability, sustainability, and the security of the energy supply. So far, in the past 20-30 years, Malaysia has shown a strong commitment. And now we are moving towards energy transition. Definitely that will also attract more investment to come in. And we are also liberating the process. Now you can actually go through the third-party access to actually allowing the data center to procure energy directly with our developer, the RE developer. So that's why I think it's like an opportunity not to be missed. Definitely, we have to continue to uphold to our standards, making sure energy remain affordable and remain secure. But at the same time, data center coming in terms of the effect of having another utility. Data center will become our next utility.
Speaking of incoming investments, we are also looking at the opportunities in the special economic zone in Johor, right? What are you seeing in terms of investor interest now? Is it exceeding your expectations, perhaps?
It is exceeding everyone's expectation. Right. I mean, according to the report.
Are there some numbers that you can provide?
Up till quarter 3, 2025, we have got approved investment up to 68 billion ringgit. I mean, when we plan in the early stage, we talk about 100 billion throughout the entire process for our 10 years target. But now, I mean, within a year, we already locked in terms of approved investment, 68 billion. But definitely, I mean, I have spoken to my counterpart from Singapore. We need to move from planning stage to the execution stage. How much of this approved investment can be realized this year, for example? So definitely, more works need to be done. We are going to roll out our blueprint and master plan by end of March, because we need to streamline. We need to actually make things really in operation.
We'll wait to hear what the blueprint tells us about the long-term vision, the investment opportunities for the zone as well. Minister, great to chat. Thank you so much for your time today. And that was Akmal Nasrullah Mohammed Nasir, Malaysian Economy Minister. Much more to come today here at the Malaysia Economic Forum. In the next hour, we speak exclusively with Maybank CEO Khairussaleh Ramli, and later conversations with Malaysia's second Finance Minister, the Asian Infrastructure Investment Bank, and the Bursa Malaysia CEO. This is Bloomberg.
We're watching Japanese markets ahead of Sunday's lower house election, especially given that today we do have a 30-year JGB sale. Let's bring in our chief Asia FX and rates correspondent, Ruth Carson. Ruth, I mean, we had a 10-year JGB sale earlier this week as well. Demand was pretty tepid, but can we just say that after the JGB meltdown that we saw a couple of weeks back, nerves have sort of calmed down?
Well, for now, I think the key words are for now. Yes, all eyes are still, though, on any bond sale, particularly when it comes to ultra-long debt. We know that yields spiked 26, 27 basis points, that fateful Tuesday, a couple of weeks ago, and how that spilled over to treasuries, to bonds, to gilts. And so when you have another sale, such as a 30-year paper coming up in Japan, all eyes are on it. Things are calm at the moment, but again, we've got the snap election coming up this weekend. We still have questions around the BOJ's timing when it comes to raising interest rates. So all this will still be on traders' mind going into the bond sale.
Ruth, how are investors positioning on the yen at the moment? The yen bear still the big voice in trading at the moment?
Yeah, it's important to remember that of all the assets that Japan has on offer to the world, the yen is the most liquid and the fastest to react to any sort of news out there. So investors are certainly jittery. I've been speaking to portfolio managers, traders, strategists the whole week, and everyone has a message, which is the yen is cheap. Like, there's no two ways about it. It looks cheap, but it takes a very brave investor to go in and buy right now. I mean, since, you know, the headlines around that rate check Friday, about a week and a bit ago, we clearly see yen between 155 to 156, but it's creeping up. Dollar yen is creeping up. So there is still that pressure there that is not going away for all the reasons that we know: BOJ policy, snap election risks, and, you know, our interest rates rising fast enough in Japan.
Yeah, and Japanese leaders coming out with all of these mixed messages on whether or not they want a weaker or stronger yen, really not helping. On the other side of the trade, what's happening with the dollar then?
Yeah, absolutely. And we have to remember that the dollar is on close to 90% on all foreign exchange transactions in the world daily. And at the moment, debasement fears, debasement worries are still plaguing the dollar. There's questions as well about, you know, the Fed's policy path. The nomination of Kevin Walsh, news of that for the Federal Reserve Chairman role, clearly boosted the dollar. But who knows? Who knows what's going to happen next, because the dollar is very much also in the crosshairs when it comes to any flare of geopolitical risks that stem from the US side. And there is definitely the underlying trade of sell the dollar that hasn't fully gone away. So we'll definitely have to see how things play out from here.
Ruth, thank you so much. Our Bloomberg Chief FX and Rates in Asia correspondent, Ruth Carson. Now, today's Bloomberg Big Take looks at Prime Minister Sanae Takaichi's vision for a more assertive Japan. We hear from people who know her best about where she hopes to lead the nation if her election gamble pays off. Subscribers can read that in full on the terminal and on Bloomberg.com. In the meantime, let's take a look at how futures are pointing on a day where Wall Street, those declines in tech, of course, those concerns about the momentum unwind, although you did see some firmness in value. And as some of our colleagues have been highlighting, that small caps did not participate in the climb is a bit of a worrying sign. For the moment, Nikkei futures pointing to slight declines. We could see much steeper losses in the Kospi. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens after another day of tech losses on Wall Street. Is that narrative of rotation out of tech into perhaps more value plays, especially at a time when there are concerns about AI spending, Avril, not to mention, of course, the memory chip shortage also hitting these tech giants?
Absolutely, and then we saw that record high capex coming through from Alphabet. The debate continues about how this is going to figure into their plans for the future and the benefits from spending so much in this space.
Yeah, so we had already seen those software makers get hit in the last session, tech stocks getting hit in the last session here in Japan, and we had a session of losses for the Nikkei. But we're still seeing a very weak Japanese yen against the US dollar, the worst performer among G10 currencies, very close to that 157 level, headed towards that 160 level, which is on watch, of course, given that it's seen as levels where authorities could potentially intervene in the markets. You're seeing the topics gaining ground 0.3%, as we have seen that rotation into value plays, cyclical sectors in the Japanese market as well. And with strong earnings coming from MUFG, together with the likes of Sumitomo Mitsui, Mizuho Financial in this earnings season, we'll be watching banks very closely. We do have a 30-year JGB sale today, so do keep an eye on that, given that we're headed towards the election this weekend. Fiscal concerns will also be felt across markets. Take a look at how Korea is also coming online, because we had another record high for the Kospi, but the Korean won still under pressure, and bond yields also rising in the Korean market because of these government expansionary fiscal policy concerns. And you can see some of those tech names like SK Hynix, Samsung Electronics continuing to lose ground. All of this to do with what I mentioned earlier, what happened overnight on Wall Street, we had U.S. stocks under pressure given the tech sell-off ongoing. Alphabet sinking after spending forecasts exceeded expectations. Qualcomm also having a tepid revenue forecast, not helping. ARM's forecast also disappointing. NVIDIA CEO, though, saying that the software sell-off is the most illogical thing in the world. But, of course, we are still continuing to see the jitters, especially in the crude space as well. We're seeing a little bit of downside, but there have been conflicting reports about the process or the progress when it comes to U.S.-Iran talks. Let's discuss all of this and bring in Hartmut Issel, head of APAC Equities and Credit at UBS Wealth Management. Hartmut, really a lot to digest, but the narrative right now seems to be a continuation of that tech rotation out of those stocks and into perhaps more value, more small sectors, more cyclicals. Can this be seen as a positive sign of more broadening out of the market, or is this a fundamental problem?
I think it is a sign of a broadening market. And we also have to bear in mind, especially if you look at Mag 7, for example, right? Over almost 3 years, right? They were the key component of earnings growth in the S&P. They still are one of the components, but not the only one anymore this year, right? So it's probably not so surprising that we see other sectors, maybe I mentioned banks here in particular, also in the US context, right? That are also coming up. And right? Many investors also see, hey, where else can I diversify things a bit? So not an unhealthy environment in my view.
Yeah, especially at a time when we saw the sell-off in software stocks when they're actually generating solid earnings. In this side of the world, in Asia, are there any concerns around the fact that AI could cannibalize some of these companies that are in play as well?
On the Asia side, actually, right, as long as there's demand for AI, right, it doesn't matter from whom or if the market shares shift or anything like the market seems to believe to some extent in software right now. Right? In the stock markets here in APAC, we don't have that kind of phenomenon or not that kind of structure and setup. And therefore, right, and we have seen also, what you mentioned Alphabet, but we have seen it before, also Microsoft, etc. Right? In terms of what I look at, right, is cloud growth year on year. It's very, very strong, and if it disappoints to some extent, then it's only because the capacity isn't there, right? The demand is not a demand issue, right? So that I think also here for the Asian semiconductor space in particular, right? As long as that rolls, I don't see so many issues there.
Are you also seeing how emerging markets are sort of breaking away from these US market moves?
Yes, indeed, we are seeing it. By the way, not only in APAC, but also in APAC, I should say. And yes, I will say, especially if we stay here quickly in our region, right? There is different drivers. I think quite interesting, right? So AI, also one of them, also for APAC, I just mentioned. But then you have value ups, right? So markets that, in terms of structure, don't really that close to AI, but they're going up, like Japan, like Singapore. And then we have markets that also look interesting. Again, a different driver, right? Which I call sort of the laggards of last year, where actually your earnings growth is accelerating. 2 examples, India, Indonesia. So yeah, different drivers. What could be better?
Talk to us also about what you see in credit that is related to the AI boom, because there also seem to be some lingering concerns about the payoff in that part of investment space. Is that something that you are also seeing?
Yeah, we have looked at it, especially also on the non-listed side. Right? The conclusion that we came up with is probably where you have more flex potentially is more like the low quality areas, which at least as far as our investors go, right? We have several times, right, told them and recommended, right? So you can go in that space, you should be in that space, but more on the high quality side, as long as that's the place where you position, that should be okay.
You mentioned Japan earlier, and of course we have seen an amazing rally given some of the structural changes in this market. We are headed towards the election this weekend, and that's really raising more fiscal concerns about this country. Is there anything that you're watching in particular this weekend that could make a meaningful difference towards the direction of the equities here in Japan?
Yeah, I think generally for the market, I mean, given we probably know what the outcome or the most likely outcome is, right? We need to watch certainly, right, that also the government, right, they do the stimulation, they do positive structural measures, but not overdo it necessarily on the debt side, right? As long as that's the case, I think it's okay, because that, in my view, is sort of, you know, something short term that could help the market. But if I look back a bit, right, these return on equity measures in Japan, they have started to increase. I think that is a key reason also why many also foreigners go back, right? These value up measures, they are beginning to work. We see it in the data, and it will not stop here. So yeah, Japan is interesting.
What about Chinese tech, which hasn't exactly been immune to the rout in the sector that we've been seeing this week?
Yeah, on Chinese tech, and of course, in about say a month's time, or half a month, I say, we will see more data, also results. The ones that I would most critically look at is a bit like in the US with hyperscalers, right? Is the year-on-year cloud growth, right? So, and we have seen, right, if I compare to 12, 18 months ago, we have seen a significant increase of some of the leaders, right? We're talking in some cases now about 30% give and take, right, or even 30+% year-on-year cloud growth. That has only come in recently, and you know, nobody has to hide between US hyperscalers anymore, right? It's virtually on par, and I think, you know, we're going to see also from here several quarters of this repeating. So I would struggle to see why the market wouldn't sort of buy into this idea.
Hartmut Issel, head of APAC Equities and Credit at UBS Wealth Management. Good to have you with us. And these are some of the tech names that we're watching in Asia. Those memory makers in Korea and Japan in focus. Of course, we've had major earnings reports out of the U.S. that we mentioned. Also, chip makers Qualcomm are both disappointing investors with their respective forecasts, and that is really adding to the broader negative sentiment on chips. But on the other side of that equation is also Alphabet. It caught investors off guard by announcing bigger than expected AI spending. The promise of a capex boom sparking a rally across Alphabet's supply chain, which includes chip names Broadcom, SanDisk, and NVIDIA, rising in late trading, among others. Let's get more with Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh. Mandeep, really markets trying to digest what came out of Alphabet, especially that spending forecast when it comes to artificial intelligence. What were your key takeaways, and what will investors be very much focused on?
Yeah, I mean, we are talking about a doubling of the capex from Alphabet for 2026. So I don't think consensus was anywhere close to that. And that's partly to do with the fact that the cloud business was particularly strong. And I think the company sees an acceleration from here to probably over 50% growth in 2026. So yes, the margins may come down because cloud margins, even though they have improved, are around 30% as opposed to core search margins, which are closer to 50%. So I think from that standpoint, higher depreciation costs tied to this capex investment may drag down margins a little bit. But we are clearly kind of looking for acceleration in top-line growth for Alphabet. And I think from that perspective, search is holding pretty strong, and cloud will see a pretty strong acceleration going forward.
What will this mean for Alphabet suppliers? We're seeing some of that infrastructure rally, so to speak, coming through.
Yeah, I mean, if a company like Alphabet is saying they are confident about the scale of the AI infrastructure build out, and they see, you know, clearly the supply constraints that everyone else has pointed to so far. So that just means, you know, we are continuing to see, component shortages across the board, whether it's memory or some other components. And, that may continue to be the case at least through second half of this year.
And those memory component shortages we've seen in the results of Qualcomm, what were some of the key takeaways that also perhaps give you an indication of what we can expect from Amazon this week?
Yeah, look, in the case of Amazon, I would compare the cloud growth for AWS. So the fact that consensus is around low 20% when Alphabet cloud segment growth was around 48%, that divergence, and when you compare that to Microsoft, which reported 38% Azure growth, I mean, clearly Alphabet seems to be taking share. So what Amazon needs to show is, one, they're keeping up in terms of that AI contribution, and also they don't want to slip too far behind when it comes to their cloud growth here.
Bloomberg Intelligence Global Head of Technology Research Mandeep Singh, as we continue to watch those tech names across Asia. Now, we do have breaking news out of one Chinese name, Baidu. They've actually come out with authorizing up to $5 billion of a repurchase program. Now, this will be effective through December 2028, according to an Hong Kong exchange filing. The board approving the adoption of a dividend policy for its ordinary shares for the first time, and these could include regular and special distributions of dividends. They expect to declare the first payment of dividend this year. Now, some of that justification coming from what they call substantial cash reserves and sound financial management capabilities, which is why the board has authorized a new share repurchase program of up to $5 billion. We have more ahead on the Asia trade. This is Bloomberg. Take a look at how some of these stocks across Japan are trading at the moment, with SoftBank falling almost 5% right there. ARM's forecasts have disappointed, despite the fact that they really exceeded most estimates, but they failed to meet the loftiest expectations of investors. Fourth quarter revenue will be about $1.47 billion. So you can see SoftBank is controlling shareholder there, falling at the moment. And you can see other names around the chip sector, Tokyo Electron, Advantage, also losing ground. We have heard from a lot of the tech giants recently coming from the U.S. with that tech sell-off on the Wall Street session. Alphabet sinking after their spending forecast exceeded expectations. We had also some commentary about memory chips and how the supply shortages are hurting some of these companies. Qualcomm, for example, giving out a tepid revenue forecast as well, Avril.
Yeah, let's talk about this as well in the context of Malaysia, because, of course, the AI sector is a big one here, and the Malaysia Economic Forum is underway in Kuala Lumpur. Our next guest runs the country's largest bank. Maybank recently announced a new 5-year plan targeting a return on equity of 13 to 14% by 2030. Joining us exclusively is Khairussaleh Ramli, President and Group CEO at Maybank. Always good to see you.
Thanks for having me, Avril.
Thank you for being here. So it was a relatively good year, but talk to us first about the underpinnings of all that in terms of what you see in the Malaysian economy this year and how that's driving the bank's business.
Yeah, I think this one is a continuation of what the government has started doing from 2023. When they announced the Madani economic policy, and then after that come the new energy transition roadmap, the national semiconductor strategy, the NIMP, etc. And since then, we have actually seen clarity in terms of execution. We have seen, of course, results, right, in terms of fiscal reform, subsidy reform, rollout of the Johor-Singapore economic zone. And of course, the results speak for itself so far. So we've got an economic growth of about, we expect last year the economy to grow around 4.7%. The fiscal deficit is going to shrink further to 3.8%. Living wage has increase in living wage has allowed people to have more income in their pocket, right? So this is again the result of, I think, a very much curated policy with outcome and continuation under the Malaysia Economic Plan 13. And that's why we are being a strategic partner, principal partner for this economic forum in Malaysia, basically to enable the government through the various ministries to communicate what is happening, what is their plan going forward. Yeah, and we have got ministers and policymakers later.
What are you expecting in terms of credit growth then, since you think growth is strong for the economy?
This year we think that the GDP will grow around 4.5%.
Right. Is there potential for exceeding those 4.5%
we are only at the
projections?
beginning of the year.
Right.
We'll see. I think the government is due to announce the fourth quarter results next week. And maybe based on that, we'll see how the momentum is. But for us, we are forecasting 4.5%. And with that, we're also looking at a credit growth around 5%. And we think that the credit growth will come, at least in Malaysia, from all segments, the consumer, the SME, and even the corporate side.
Okay. Are there any particular specific bright spots among credit growth then?
Obviously, on the investment side, given that investment has come out quite strongly in the last 1 year or so, and banks are of course supporting growth in investment. We're also seeing a pickup in corporate exercises as well, and where banks can support. But of course, the mainstay has always been on the consumer side and the SME side, right?
Okay.
And the focus on domestic demand, for example, by the government, then will enable banks to continue to support that bread and butter mortgage, higher purchase, as well as SME credit growth.
Do you see Bank Negara having scope to cut this year in order to support?
No, we think that there's no pressure for Bank Negara to cut. We think that the OPL will remain at the current level throughout the year. Inflation remains benign. And when we see the external factors, for example, even in the US, it is still not sure, right, where it's heading. Potentially there will be some weakness still in the currency in the first half, but given the still concern in inflation, that might not be the case in the second half.
Okay. And what about where you see the Fed's trajectory overall for the year? I mean, you alluded to some
our
of
house
this.
call is that there is still room to cut another 50 basis points in the first half. But again, we don't know. There's new Fed chairman coming in, and he may have different ideas given the economic situation in the US. But at least for what we're seeing now, we're looking at first half cut of around 50 basis points.
Overall for the business, do you see funding costs easing?
We did see a lot of pressure maybe 2-3 years ago on deposit competition, and hence increasing the pricing for us, but not as severe last year. So I think liquidity is ample, and not just from customer, but also from the markets as well. So I think funding is available, liquidity is ample for us to support growth.
Okay, growth also in the region. I mean, how are you seeing Southeast Asia growth, regional businesses? How do you compare against the competition?
Yeah, I think, again, for Maybank, we still call the 3 countries our home markets, Malaysia, Singapore, and Indonesia. Apart from Malaysia, we're quite bullish on Singapore. And Singapore now already contributes close to a quarter of our asset and profit. And within that, it's wealth management and even the corridor. We think that being, biggest bank in Malaysia and got a significant presence in Singapore, this Malaysia, Johor, and Singapore corridor is something that we can even further strengthen our presence in.
On wealth management in Singapore and competition in such a key market for you, I mean, there are very established players there. So how exactly are you competing with them?
We look at our own DNA perhaps, right? And not really competing at the top level of high net worth clients. And when we look at our DNA, it's basically the entrepreneurs who then can become our wealth customers as well, or vice versa. Avril, we're trying to play on our strengths and not really competing with the big boys in Singapore. So in Singapore now, our wealth fee income is already more than half of our total fee income. And it's growing quite nicely. So it's not just Singapore per se, but it's also Singapore as a hub, bringing in wealth from this region as well as from the Gulf countries and even Greater China.
Okay. You talked about, some of the importance of the Singapore market. Of course, the special economic zone, that one is a key thing to watch, up and coming. What are you seeing in terms of investor interest there?
it's strong. And again, for Maybank, we have started this promotion of Johor Singapore Economic Zone maybe from 2 years ago, not only recently. And we spoke to investors, etc. And for us alone, we actually brought in around 15 billion ringgit worth of investment so far into Johor. Right, and of course the big one will be is data center, but there are other areas like logistics, healthcare, manufacturing. Now that is on the institutional side, but we think the Johor-Singapore corridor even has got a retail component as well and a wealth component, because we have individuals coming to Johor, we have individuals working in Singapore, etc. So how can then Maybank provide that holistic ecosystem, not just on the corporate side, but also on the individual side?
Okay, we'll have to leave it there for today. It's going to be very interesting seeing how this all shapes up. Great to chat as always. Khairussaleh Ramli is President and Group CEO at Maybank. And our coverage of the Malaysia Economic Forum continues here in KL. Still ahead, our exclusive conversations with the AIIB, Malaysia's second finance minister, and the Bursa Malaysia CEO. This is Bloomberg.
You can actually explore live streaming news and interviews, as well as all Bloomberg TV shows, documentaries, reporter analysis, and more in one place. Check it out at bloomberg.com/videos. We do have an alert on the Bloomberg as well. President Trump speaking, saying that President Xi Jinping will come to the White House toward the end of the year. Of course, we had seen President Trump and President Xi Jinping talk over the phone on Wednesday, discussing trade and geopolitical flashpoints, including Taiwan. President Trump saying that he hasn't necessarily committed to a tariff rebate check system, but he's considering it very seriously. President Trump also talking about the independence of the Fed, saying that the Federal Reserve is, quote, in theory, an independent body. And the Chair Powell was respectful in explaining renovations, this referring to the Justice Department investigating the Fed over testimony by Chair Powell when it comes to a building renovation project. So we'll get you more as we have the latest coming from President Trump. We have more ahead on the Asia trade. This is Bloomberg. And we're watching one stock moving in the Japanese session. Do keep an eye on Panasonic, gaining more than 14% after they reported third quarter earnings. It's interesting because they actually cut their operating income guidance for the full year, and this guidance missed the average analyst estimate. Operating income coming in at 290 billion yen. More ahead. This is Bloomberg. We're getting Australia's trade surplus coming in at 3.3 billion Aussie dollars. This is actually widening from the previous month when it fell to 2.9 billion Aussie dollars. We'll continue to watch the numbers as we're getting the exports growth of 1%, which is in the green after a contraction of almost 3% in the previous month. For the month of December as well, we're seeing month-on-month imports, though, contracting 0.8% for a trade surplus of more than 3 billion Aussie dollars. Australia's largest pension fund, AustralianSuper, is hunting private equity deals in Asia to grow its portfolio. Speaking exclusively to Bloomberg, Chief Executive Paul Schroder also discussed their tech allocation amid a sell-off in the sector.
We're heavily exposed to tech, and we're invested heavily there. Of course, it's going to be a really important part of the future, but nobody quite knows what its form's going to be. I like to remind people that railways started in 1825 and the iPhone arrived in 2007, and ChatGPT went to the public in November 2022. So we're still early days, just starting to mature. We're seeing a bit of extra capex at the moment. We're watching valuations. We're thinking about future earnings. But, you know, is AI the big story? Of course. Is it going to be disruptive to software? Almost certainly. Is it going to be disruptive in other ways? Of course. But nobody quite knows just how.
Yeah, so how do you separate these AI-driven gains from the real thing or just hype? Do you have any concerns that when you look at this AI trade, does any of it look like a bubble, like shades of the dot-com bubble?
Oh, well, I think the fundamental thing to know about AustralianSuper is that we're an active investor. And, you know, the world is swimming in passive cash and passive capital. And our people spend a great deal of time looking for value and where we're going to generate free cash flow in the future. So, you know, we're not just following the index here. We're very thoroughly, carefully thinking about who are the likely winners, who are the likely ones to create long-term value, but most importantly, who's got the capex right, who's going to have the earnings right, and who's going to have a sustainable business model in the future in the context of a globally diversified portfolio. And of course, that's so important to investors and to the members of the fund that they've got exposure in various markets, various sectors, and across all asset classes.
Okay, so in terms of being active and globally diversified, are you redeploying money to Asia from the US or elsewhere?
We're very strong on the US. You know, it's been the source of the greatest earnings and wealth over the years. I'll just give you one example. If you had $100 and you invested in European markets in 1920, it's worth $19,200 today. If you had the same $100 and invested in the US markets in 1920, it's worth $104,600 today, 5 times. So so many of the great companies are in the US. So much of the deep earnings is in the US. So we're strong in the US, but we're coming from behind. About 35% of the portfolio is exposed to the US. So we're strong in the US, we're investing in the US, we've got a great office there in New York to help us invest well for members. But it's also true that we are diversifying and thinking about Asia, especially through the PE lens, because Asia is going to represent 42% of GDP in not too long.
Now, you did mention PE there. That is attracting some significant interest at the moment. Can you tell us a little bit more about your strategy for private equity investing?
Private equity represents to us, obviously, the greatest opportunity for reward, but also risk. And it's also an expensive way to invest. So we're thinking very deeply about PE. Our global head of PE is based in New York. Our future is one of more PE, probably about 4% of the portfolio is PE at the moment. We'll probably get to 10. The fund's going to triple over that time, so you can see the size of the exposure growing. And where we are at the moment is just at the beginning of a plan to expand our PE exposures in Asia and across Asia, and as I say, across various countries. So PE is going to be very important to us. It's a very important part of building AustralianSuper members' retirement balances. I imagine we could double our exposure in a fund that's tripling. It's a co-underwrite, co-invest, deep partners, high-quality GP strategy that we're implementing. And it's one that we're now thinking about expanding into Asia.
So if you're going to expand this into Asia, which particular markets would you be looking at? And how do you navigate around some of the transparency risks when it comes to private markets?
It's very important that we do this prudently and thoughtfully. We've had some really good experience. We've got an office in Beijing, which helps us a great deal. We've had some really great experience in India. We're energised about where Japan is at the moment and the opportunities that exist there. So I don't want to foreshadow exactly what we'll be doing and where, but I think it's more likely that those opportunities will exist in those strong, more developed nation economies where we've already got existing connections and relationships.
AustralianSuper Chief Executive Paul Schroder speaking to Bloomberg's Paul Allen. And you can explore live streaming news and interviews, as well as all Bloomberg TV shows, documentaries, reporter analysis, and more in one place. Check it out at bloomberg.com/videos. We're also seeing rare earth stocks falling in Australia and South Korea. That's after the Trump administration hosted a major summit on critical minerals, bringing together 55 countries to cut reliance on China and secure stable supplies. Vice President J.D. Vance called for predictable investment conditions and a coordinated agreement on price floors. The topic has been discussed among industry players as a way to protect non-Chinese companies from China.
Today, the international market for critical minerals is failing. Consistent investment is nearly impossible, and it will stay that way so long as prices are erratic and unpredictable.
President Trump says Chinese President Xi Jinping will come to the White House towards the end of the year, and that's after he had a long, thorough, and as he said, excellent phone call with Xi on the phone on Wednesday. Let's bring our China correspondent Mimin Lo in Hong Kong into this. Mimin, how did both sides portray that phone call?
Yeah, Avril, certainly it seems like a very fruitful one, given that President Trump announced that he is now inviting President Xi to visit. That will happen before the end of the year. This is obviously a reciprocal move after he said that he will be visiting China in April. So all signs pointing to the relationship stabilizing. He said on Truth Social that his personal relations with President Xi is extremely good. He talked about a range of issues, everything from Taiwan to Ukraine to Iran, and trade issues as well. China committing to buy about 20 million tons of soybeans this harvest, 25 million tons the next harvest. He talked about oil and gas purchases from China as well. But interestingly, you contrast that with the Chinese readout. The tone is a lot more serious. China saying that it always aligns its actions with words, a kind of signaling to the U.S. They want to see the same sort of behavior from the U.S. as well. And one key focus of the Chinese readout was Taiwan. China outlining that this is the single most important issue in U.S.-China relations and warning the U.S. to exercise utmost caution when it comes to arms deal with Taiwan, saying that China will never allow Taiwan to be separated from it. And of course, this comes after the U.S. had inked a deal last year, one of the largest ever, totaling about $11 billion, that really angered China and led to a very extensive military drill around Taiwan.
And the timing of this conversation is so interesting because President Xi also spoke with President Putin just hours before talking with Trump. How did that conversation go?
Yes, that's a very different conversation. It was an hour and a half long, so a very long video call that the two men had, according to TASS, the Russian state media. They talked about Venezuela, they talked about Cuba, they talked about Iran, and of course they reaffirmed their relationship. China is saying that it will continue to open up its economy to Russia, that they should jointly safeguard this global international order. So a show of unity from the two sides, and as you said, the timing is very interesting because it is coming as President Trump is weighing potential attacks on Iran and has threatened additional tariffs on countries that trade with Iran. And of course, China is the #1 trading partner of Iran. And analysts have said that both Russia and China, they both see Iran as this linchpin and a counterbalance to the U.S. in the Middle East. So no wonder they have such a close relations. And if you look at the People's Daily, which is the Communist Party mouthpiece, it's interesting to note that the coverage of President Xi and Putin's call was taking a lot more space. If we can show it on the screen, it's taking up a lot more space than the President Xi and Trump phone call. So that shows you the importance of the relationship with Putin. You can see the top right corner. That's the coverage of Xi and Trump's phone call, taking up a lot less space than the other one.
Mm-hmm. That's quite interesting. Mimin Lo, Bloomberg's China correspondent there with the latest on those two conversations by President Xi Jinping with world leaders. Now, we are keeping an eye on the oil prices, tensions between the U.S. and Iran in focus. Both sides saying that diplomatic talks are still set to go ahead in Oman on Friday, but President Trump has told NBC News Tom Yamas that Iran's supreme leader should be worried as U.S. forces amass in the region.
I would say he should be very worried, yeah, he should be. As you know, they're negotiating with us.
I know they are, but the protesters have said, you know, where are the Americans? You promised them we would have their back. Do we still have their back?
Well, we've had their back. And look, that country's a mess right now because of us. We went in, we wiped out their nuclear.
So that's the question. If we wipe them out,
we have peace in the Middle East.
Yeah.
If I didn't take out their nuclear, think of it. If we didn't take out that nuclear, we wouldn't have peace in the Middle East because the Arab countries could have never done that. They were very, very afraid of Iran. They're not afraid of Iran anymore.
Our Washington Deputy Bureau Chief Laura Davison joins us with the latest on this. Actually, what's the latest, Laura? Where are we in these conversations? Because we're also very confused about the parameters of these conversations.
Yeah, there's been a lot of back and forth really just in the past day or so about where these talks are going to take place and who will be in the room and what the scope of the conversations will be. The U.S. originally said that these talks were going to be in Turkey. They would meet on Friday. Now the venue has shifted to Oman. It's unclear exactly, if both sides have fully agreed here. U.S. wants there to be participants, foreign leaders from other countries in the region, in the room, not as necessarily active participants, but as observers. The U.S. also wants the conversation to focus on a more broad aperture here, not just focusing on the nuclear program, but also on the ballistic missile program, the treatment of protesters, as well as the Iranian support for other militant groups in the region. The U.S. has said that this is really important, that this has a more wide-ranging conversation versus something that's just focused on the nuclear program. So this, really calls into question about, if they can't agree on the venue, the format, who's going to be participating, are they able to really come to any sort of meaningful conclusion out of these talks scheduled for Friday?
Yeah, so Laura, who might some of the brokers or the mediators for these talks be?
So for the U.S., it will be Trump's son-in-law, Jared Kushner, in the room, as well as White House envoy Steve Witkoff. The U.S. is really essentially trying to get a temperature of where Iran is on the issue. We have yet to really hear a cohesive strategy from the president of how he wants to proceed with Iran. We've heard him over the past several weeks talk about this armada of ships that's headed towards the region. He said in this NBC interview just a couple hours ago that that Iran should be worried. But we haven't really seen, kind of any plans going forward. A lot of international observers have noted this is a similar strategy that Trump used before, it went into the country to arrest Nicolas Maduro in Venezuela. So that's, of course, what Iran will be watching for closely is, does the U.S. seem serious here? Are they pursuing some sort of military attack? Or is this sort of, leverage going into the conversation to sort of show some military might that Trump doesn't actually intend to use? That is still unclear.
So what are the low-hanging fruits and perhaps some avenue of compromise here?
Yeah, so I think both sides are looking for ways to at least de-escalate the tension. Iran is going into this conversation with a lot less leverage than it had a couple months or even a year ago, as these protests in the street, have really bubbled up. This is the first time that we're really seeing the U.S. side and the Iranian side sit down since these protests have happened. Of course, there's, been sort of a ratcheting up of tensions. There was a drone that was shot down yesterday. So the kind of the lowest hanging fruit, the easiest, kind of thing they could achieve is to at least cool the temperature and agree to talk again at a later date.
Laura Davison there joining us from Hong Kong, Bloomberg's Washington Deputy Bureau Chief. We have more ahead on the Asia trade. This is Bloomberg. Take a look at how Japanese assets are trading. We're seeing a little bit of upside for Japanese equities after a session of losses that were taken down by that tech sell-off. Software makers were down. Tech names had been under pressure, but we've seen a little bit of a reversal early in the Asia trade as we continue to see a very weak Japanese yen compared to just a few days ago. 156 is your level, headed towards 157 ahead of the lower house elections this weekend, and also as we head towards a 30-year JGB sale as well. And really, it's all about positioning, isn't it? Because we do have those elections coming up this Sunday. Our senior stocks reporter, Hideyuki Sano, joins us now for what to expect. Because, Hide, of course, the expectation that Takaichi side will probably have a major win here. We're seeing a little bit of acceleration in the supposed Takaichi trade. What are you watching?
Exactly, yeah. Investors seem to be betting that the Takaichi's Liberal Democrat.
Yeah, it seems that we
Party will
don't
win
necessarily.
The LDP is going to win a comfortable majority, and that will allow her to consolidate power and give her strong mandate to push through expansive fiscal policies. And if you look at the performance of the Japanese stocks since the first world surprise election came out, the market has outperformed other key major developed markets, and also defense stocks, which are considered as a Takaichi play, have done quite well. So there are signs that investors are already pricing in a strong chance of the LDP victory.
What are the risks for Japanese stock markets, especially given that we have seen an incredible run-up with the weaker Japanese yen as well?
Yeah, I mean, one clear risk is that she may not be able to meet already elevated expectations because investors are already expecting quite strong showing by the LDP. And another perhaps potentially more serious risk is that the election victory may embolden her to take even more aggressive stimulus to such an extent that it may rattle the bond market. Now, if you look back just last month, the Japanese government bond market went through a major sell-off precisely because she suddenly announced a plan to cut consumption tax on food. And some investors fret that she may again test the limits of bond vigilance again, whether if intentional or not. And if bond prices fall too much, then that is going to have a major consequence for Japanese stock market as well. And also in the long run, there's a risk that her aggressive policy might stoke inflation again. Now, Japan's inflation has been increasingly sticky and is also becoming home-driven rather than just simple cost push inflation. And the yen has also weakened again after hitting a 3-month high the other day, just after a suspected rate check. So if the yen weakens further, then that could raise the risk of inflation. The inflation expectations measured by Japanese inflation-linked bonds have been rising, so that is another risk to watch.
Our senior stocks reporter Hideyuki Sano there with what to expect from the markets as we head towards that election this weekend. In fact, we have more on Bloomberg Big Take. We're looking at Prime Minister Takaichi's vision for a more assertive Japan as well. We hear from people who know her best about where she hopes to lead the nation if her election gamble pays off. Subscribers can read that in full on the terminal and on Bloomberg.com. And it's also earnings season here in Japan. Mitsubishi UFG shares under pressure today, falling after the bank's earnings did not necessarily provide any positive surprises. Analysts highlighting unrealized losses on yen bonds. Also looking ahead to Sony, who will be reporting later today. We'll be watching how memory chip supply issues factor in. Let's bring in Japan Equities reporter Alice French. Alice, I mean, MUFG still posted a pretty solid quarter, profits rising, but the market's not necessarily too happy right now.
Yeah, look, I think part of the problem is really kind of the high expectations that there are around Japanese bank stocks at the moment, right? Of course, we know that they've been rallying over really the past 2 years because of these, the BOJ rate hikes, and we know the policy rate now up at 0.75%. That's going to be, further tailwinds for Mitsubishi UFJ and the other mega banks. But it sounds like, the loan yield growth for Mitsubishi in the last quarter was slightly slower than peers. And as you mentioned, some analysts pointing out those bond losses, and it'll be interesting to see. I think we'll really start to see those kind of reflected in earnings next quarter and how much that might impact sort of the sector as a whole. But yeah, I think just a little bit of disappointment. But I wouldn't be surprised if it kind of resumes that rally, especially as we have expectations for more BOJ hikes later this year.
And Sony in focus, given, of course, a tech sell-off that we continue to see, but also because Nintendo underwhelmed.
Absolutely. It is all about memory. And of course, we were talking about Nintendo yesterday that got a big hit. These memory issues are just all that everyone is talking about when it comes to game consoles, right? And of course, Sony, it's not just things like the PlayStation. They also make so many other consumer electronics, TVs, smartphones, and these kind of soaring memory prices that are up on, AI demand. They are going to hit Sony's margins. Morgan Stanley predicting that, Sony might have to even raise console prices by as much as 10%. Of course, that could hit demand. I mean, having said that, Sony it's a diversified company, and they do have other areas to fall back on. We know they have strength in things like music and films. They've had the Demon Slayer movie. They've had the Ghost of Yote game software coming out recently too. So there are also upsides and things that can kind of cushion that caution. But I think it's going to be all about memory, and that's going to be in focus today.
Bloomberg Japan Equities reporter Alice French there as we continue to watch all of these moves on exporters as well, gaining ground today as we continue to see a weak Japanese yen against the US dollar, the worst performer just yesterday against G10 currencies. This is Bloomberg.
We've been talking about this momentum unwind and how it's been hitting tech stocks. You're seeing Japan, South Korea already reeling, and China looks like it's not going to be immune. Looks like it'll be a down day, a rough day for stocks in the region. That's it from the Asia trade. The China show is next. This is Bloomberg.